Hi and welcome back to today's morning report. Charts appraisals on Tuesday, the 1st of December, with me, Richard Perry, market analyst at Tech Markets. Let's look at cable now, and we've had this UK PMI data that's just come out, and it's actually come out worse than expected. The PMI missed expectations quite big actually. You had the expectation of 53.6, and it came in at 52.7. Now that is has weighed on cable today. In the last hour, and at the moment, and I say at the moment, we've got a bearish key 1 hour reversal, or a bearish engulfing pattern on the candlestick. You've got another 20 minutes of this hour, so it depends on how this one goes, but certainly that's sort of beginning to now turn around this little mini recovery we had on cable this morning. Now that recovery did not breach through the 51.35 resistance, which is that initial resistance from Thursday last week, Thursday last week, and that remains in place, and that's interesting because that is an initial reaction high that hasn't been breached. So this little mini recovery has it already run out of steam. You needed to see, I think, a move above. It's probably 51.90. Or 51.50 initially is that reaction low. There's if I come back on the intraday chart, you can see 51.50 becomes a basis of resistance, that reaction low there, 17th, and then a reaction high on the 24th. So you got that sort of 20 pips worth of resistance, 51.35 up towards 51.50 area, and then subsequently 51.90. So there's quite a lot of resistance overhead, a lot of overhead supply, and it's failed to sort of make that move above that resistance. And you didn't really see the RSI moving into positive territory either. You're sort of failing on on the hourly move above 70. That failed, or certainly has done so far. And it's pulling back again. You might now see the momentum indicators rolling over. It certainly looks that stochastics are already beginning to roll over, and also the MACD lines as well. So this rally may well have already run its course, and I think that in the next few days you've got so many high risk events that what we're going to see is a little moves with that data. But certainly I think that the general air of dollar strength is still in this chart, and then mini rallies are seen as a chance to sell. So I would be still playing out that as your strategy, because there's so much overhead supply. You do tend to get these little jumps in cable, but they tend to be pounced upon once again by the bears as a chance to sell. So with so much overhead supply going on here on this chart, so many old key supports that have been broken. I've got the bar here at 51.60 area. That was an old key low. So between 51 figure and 51.60, you've got all this overhead supply that is going to sort of help to fuel the bear pressure, I think, in the next few days, certainly until payrolls, and when we get a more of a definitive view on payrolls, then we might get a bit more direction. But at the moment, I'd be still using these rallies as a chance to sell on cable, and that seems to be the case at the moment. So I wish you good luck in your trading today, and I will speak to you later. Thank you.